Hi, this is Alan Gassman. I'm here with Brandon Ketron, and we're going to talk about the new House of Representatives bill that was passed this week. It was passed almost unanimously. Only one congressman or congresswoman voted against it. So we expect that it's going to become a law somehow with the Senate passing something. Although we're not absolutely sure, and there's a little bit of confusion, I think, even in the press, when Mitch McConnell said that they're not going to pass anything in the Senate. I think he was talking about something else. What do you think, Brandon?
Yeah, I think I agree. I think he was more talking about the HEROES Act that the House proposed, which not only included changes to the PPP program, but also a bunch of other new stimulus packages and some other of items on the Democratic agenda. And I think that's what he was referring to, not necessarily this really simple HR 7010 that's 5 pages, I believe, that really just addresses the PPP loan program.
Right, right. So before we get started, please feel free to register or let us know if you'd like to be registered for any of these free webinars that we have coming up. Planning for the single physician on June 6th is usually pretty popular, and gift tax return tips and traps for accountants is popular as well on July 2nd. In the not so free department, for those of you who are interested, we're going to be spending a full 2 hours on the PPP rules. We're going to take them from A to Z. We're not going to talk about the history. We're going to talk about what the rules are now. We're going to talk a little bit about the spreadsheet as well. Kevin Cameron's going to join us. And then another presentation that I think is really needed, and it's taking a lot of time, quite honestly, to put this together, but a 1 hour talk just for independent contractors and sole proprietors. So if you can't attend these or you don't want to pay to attend these, just let us know if you want to see the slide deck, and we'll send you the slide deck when it comes out, and it should be a good resource. Page 7, there's still a lot of PPP money left, and I think there'll be a lot more people filing the loan for the loans as they better understand them. I think a lot of people have been left behind. They've just been so busy doing things with their business. But seeing that the business is not picking up nearly as quickly as what had been predicted when the shutdown began, it seems that the money is more necessary than ever for a lot of clients. A lot of you on this program this morning saw the Forbes post that I put on last night. I've changed it just a little bit, but not much. And this is what we're going to use as the PowerPoint slides, so you can go back and go to Forbes and review it there if you like. We welcome any and all questions and comments on everything we do. Quite candidly, we learn a lot when people send us emails and explain that we didn't explain something properly, or we didn't understand it the way that they don't understand it. And as always, send the hard questions to Brandon and the compliments and the easy questions to me, and we'll be sure to thank you for that. I think everyone on this call realizes that this is from the CARES Act. It was passed on March 26th, and then the SBA passed a lot of rules, a lot of regulations, issued a lot of FAQs, and these are not all consistent. In fact, some of them are consistently inconsistent. There's a lot of things that we really don't know yet. If you refer to my Forbes article of May 23rd, you can get a fairly good update. And if you read Tony Nitty's articles, NITTI, in Forbes on the PPP program, you'll pretty much know most of what there is to know. But one thing I want to mention is, while it is certainly most probable that these rules are going to change and that people are going to have more than 8 weeks to spend their PPP money, I would strongly encourage everyone to make their application very, very soon after the 8th week, if there is full forgiveness, to get it over with. Get it done while the computers are working, the bureaucracies are working, the CPAs are working, the SBA is working. Congress may change this law for the worse. We don't know. We see they're going to change one thing for the worse here for some people that we're going to tell you about. So stay the path. roll up the sleeves, get the calculations done during the 6th, 7th, 8th week, know where you're heading. If you get full forgiveness, fill out the application as it is now and get that approved. So Brandon, let's get started here. Do you want to talk about the extension of the 8-week period to the 24-week period?
Yeah, so this is really one of the main changes brought about by this new bill passed by the House of Representatives, and it's the extension of this 8-week period now to a 24-week period. So instead of just measuring expenses during the 8 weeks, you now have until the earlier of 24 weeks or December 31st. So we know that when we got this loan, we only got it for around 10 weeks of your payroll. So there really should not be a whole lot of issue now for borrowers to spend all of the money on payroll costs. And given that, now I think really the more important thing is we pay attention to our number of full-time equivalent employees, salary reductions, because all that's now going to apply to the end of this 24-week period as well. So we'll touch on that here in a little bit. But one of the other things they provided is that for borrowers that already have a loan prior to the passage of this law, they can elect to use the original 8-week period, which Alan touched upon briefly earlier. But you can go ahead and make that election. If you have full forgiveness, go ahead and apply, get the full forgiveness, get this thing over with. Alan, do you want to expand on a little bit why that might make sense for a lot of borrowers to go ahead and do that?
Well, for one thing, the ratio of your employees that you keep will cause a reduction in the forgiveness if you have a drop that is not what we would say excused. So if you have already gone through the 8 weeks and you've been able to keep enough employees to not have a reduction, we could end up with another COVID virus shutdown much worse than the first one we had. We can't predict history here. We're in a black swan event. So that would be one reason, because if you can't keep all the employees there for the 24 weeks, then you're going to have a reduction. And if you need a line of credit or you need to otherwise borrow money, who's going to want to loan you money when they think that you owe this amount until they see that silver bullet back from the SBA, which will eventually come back saying, yes, your loan has been forgiven. Now, one thing I want to emphasize, this bill has not become law yet. So we're going to try to use the terminology would happen, not will happen. This has not become law yet. I'm willing to bet Brandon's next bonus that it will come to law very quickly, but it'll be different than this. The Senate will come up with differences. But one question I was asked last night is there anything in this bill that's going to hold it up because they threw in a tax law change or a social change or a religion-oriented change? No. This bill was bipartisan, and it simply fixes the PPP rules the way the House thinks it should be done. And
But
go ahead.
before we move on to this next slide here, another question that I've been getting a lot is if they do extend this 8-week period to 24 weeks, is the restriction on owner compensation also going to be increased to be now 24/50 seconds of $100,000 or their 2019 compensation? And I think that's probably going to be the case that they are going to change that. We'll have to wait and see how the SBA comes out with regulations, because that was again another restriction added by the SBA on this limitation. But I think that would make sense to extend the owner compensation to 24/50 seconds of their, limited to $100,000. And and a lot of people would then be able to spend the full loan amount on just owner compensation. But I think you also have to remember that there's reductions if you reduce your employees, if you don't keep them on the payroll. So don't think that just because you can spend it all on your owner compensation replacement, that you don't have to continue paying your employees. I think that would be a mistake a lot of borrowers might make.
Right, right. And the other thing I point out at the bottom of page 11 is you can be fairly aggressive. I mean, you have to be legal, but you can be fairly aggressive in characterizing the expenses that lead to forgiveness and file after that 8th week, knowing that if they come back and audit you, you'll be able to switch to the 24 weeks and simply reapply, and that should be your belt and suspenders. But Brandon, here's the cliffhanger. Are they going to make this into a 60% cliff? That is going to hurt some clients. Some clients have huge rent costs and very small employment costs. For example, when you go to the mall and you see those kiosks, those companies have significantly less than 60% of their expenses in payroll. So why don't you give us a thorough understanding of what the 75% test presently is and what the 60% cliff would be?
Yeah, so under current law, there is this requirement that not more than 25% of your loan forgiveness amount can be attributable to non-payroll costs. Essentially meaning you have to have 75% of payroll costs, 25% of non-payroll costs. So the way that works on the application is you actually take what you spend on payroll and divide that by 0.75 to get your maximum amount of loan forgiveness. So that's essentially me saying that your non-payroll, you can also take your payroll cost, divide it by 3, and get what your maximum non-payroll cost can be. So even if you don't spend a full 75% of the loan amount on payroll costs, you still get credit for what you do spend. It's just that your non-payroll costs are going to be limited. Now, what this new bill would provide, if it does become law, is that you have to spend 60% of your loan amount on payroll costs to achieve any forgiveness. So if you don't meet this standard, you have to repay the entire loan amount. So it's going to be really important for borrowers, if this does become law, to consider how can I get this all spent on payroll costs, at least above 60%, so you'd be eligible for loan forgiveness. Now, we do know that our loan was only 10 weeks of payroll, so we have 24 weeks to really pay this out. So it shouldn't be a big issue for a lot of borrowers, but there are some, such as Alan mentioned, that might have a large loan amount and not be able to meet this standard, and then not be able to get any type of forgiveness.
Brandon, should we mention this December 31st at this point, or do we cover that later?
I think it's covered in the next couple of slides. So
oh, there we go. Okay, you
good timing.
cover this too.
Yeah, so there is a rehire exception in the statute, and it provides that if you have a reduction in your number of employees during a certain period, and you bring them back prior to June 30th, then you can get full forgiveness as if they were never let go in the first place. And the current bill that's pending would provide the same type of thing, except they are moving that June 30th date now to December 31st. So you have a lot longer period of time to consider when you're bringing these employees back, but we also have a lot longer measurement period time of our number of employees on the payroll. And remember, this is calculated based upon an average weekly number of full-time equivalent employees. So we have a long measurement period of when this would be. But we do have this amnesty rehire date, December 31st. So Alan gave us the example here in the article where if we have 100 employees before the virus and we cut these down to 50 during our 24-week period, we would have until December 31st to bring those 50 employees back to get to that same number of full-time equivalent employees to avoid a reduction in our loan forgiveness. Now, they don't have to be the same employees. They can be new employees. They don't even have to be doing the same activities that they were doing prior to the virus. They could be doing something completely different. So you might look at even hiring a bunch of part-time workers that you can use the simplified method and count them as a 0.5 full-time equivalent employee, no matter the number of hours that they work. If they only work a couple of hours a week, you can still count them as a half a full-time equivalent employee under this simplified method they provided. And they could just do simple things around the business, maybe improve systems, maybe do some filing work, maybe do some janitorial work and cleaning stuff up. And that can help you with this reduction calculation by bringing them back on and bumping up that number of full-time equivalents.
Unless the SBA comes up with regulations before December 31st, which says that they have to be part of the original structure of the workforce somehow, which is, again, hopefully the law that comes out will allow you to use your choice of June 30th or December 31st. And a lot of businesses, quite frankly, won't have any money left on December 31st to have anyone brought back, and then their company will go bankrupt, probably worse than it would have, and other creditors are going to suffer. With this extension, it'll help most people, but it won't help everyone. And that's what we discuss here on page 14. Page 15 many of our clients and people that we've consulted with respect to the PPP are having a hard time even getting their workforce back when they want to, because quite frankly, employees are getting their $600 a week plus their state unemployment amounts, and not so crazy about risking their health coming in, not so crazy about not being with their children who are home from school. So, Brandon, what does this new statute do for those employers?
Yeah, and I like what you called it here is we tried to rehire but really couldn't exception, and that's really what it says is the some of the exact language here is that you have to document in good faith, meaning we have to have some sort of written acknowledgement of this, that we tried to rehire individuals who are our employees on this February 15th date, and if we can't rehire them, if they reject that offer, we have to document that rejection. And then not only that, but there also has to be an inability to rehire similarly qualified employees for the unfilled positions on or before December 31st. So we have to take a look at this. We have to, make sure if we are relying upon this exception to document these rejections, document that we were trying to retain these employees and that they just didn't want to come back. And if that's the case, you're not going to be penalized. You can count them as if they we're there and we're a full-time equivalent employee, so you won't have a reduction in your loan forgiveness.
Okay, and as I say at the bottom, please send me your resume if you are an experienced corporate or estate planning paralegal, because we are having trouble rehiring ourselves, and I'm sure a lot of lawyers and CPAs are going to have trouble rehiring. It's interesting that the latest round of rules from the SBA say that they're going to require you to rat on your employees, report them to unemployment if you offer them their job back and they don't come back, in order to count that employee. So that's going to be very interesting. Now, the title of this one was encouraging. It said, if you can't restore business due to comparable level of activity because of social distancing or other federal health guidance. But this has to be based upon federal guidance itself and not necessarily on the fact that things are really slow. So I don't think that Part B here, as presently written, is going to help nearly as many clients who need help. Now, that last Forbes article that we posted on the interim rules goes into more detail on different categories of employees who you consider as if they came back, even though they don't come back, such as if they refused to come back or you had to terminate them for good cause. Interestingly, there's no mention about what happens if they died. So I don't know, can you offer a dead person their job back and then they reject? Not clear on that, but it's kind of silly with 100,000 deaths from the virus that an employer would be punished because an employee died from the virus and was not able to come back. Now, number 6, the repayment, as we recently learned from the SBA, would be no payments due, 1% interest, all amounts repayable completely on the 2-year anniversary date of when the borrower got the money. They are apparently moving that, or Congress would like to move that to 5 years. Now, I'm afraid that that's going to cause a lot of people to take the loan less seriously. They'll be buying a lot of luxury cars and boats out of their companies, and then in 5 years not be able to repay it and not be able to get loans from other lenders necessarily in the meantime. But that is what the House saw fit to do. Clearly they all want to be reelected, but that's one that I was surprised at, because they could have just extended it later as opposed to extending it now. Brandon, any comments on that?
Yeah, no, I agree. I think that 2 years was certainly a reasonable amount of time. A lot of these are not large loans, and they're pretty much, incomparable as to the size of the business. So they should not have any issues with repaying the small amount that would be left over after, the loan forgiveness that would presumably apply. So, 5 years, it seems like a long period of time to really, and then a lot of people might even forget about this loan, think then, 5 years later, oh crap, it's due now. What do I do? So yeah, we have to pay attention to this, and we'll see what happens here.
Right. And then the deferral of employer's share of payroll taxes now applies for 2 full years, whether you got a PPP loan or not. So that's another act of generosity on the part of the House of Representatives. And we'll doubtlessly see a lot of businesses who won't be able to pay this after 2 years, and then the IRS will be knocking on their doors and taking their cars and all those things that the IRS typically does when you don't pay your taxes. So I know those of us who are advisors are telling our clients, whatever you're saving on the employment taxes, please, please, please put it in a special account, or make sure you understand that when this gets owed, it's not going to be a soft and fuzzy and friendly House of Representatives there to help you. It's going to be IRS collections people. And if the Democrats sweep this next election, you're going to have more IRS collections people than ever existed to try to help get full employment and get the IRS up to where it can be to collect more tax dollars. And then Brandon, where are we with the deductibility of expenses? I know that everybody thought that the PPP loan, when it's forgiven, it's not taxable. We know that, but now they're taking away the tax deduction that you would have gotten for the expenses you pay.
Yeah, and that's exactly right, Alan. The IRS has issued this notice 2020-32, if you want to read through it. But that notice provides that to the extent that the expenses relate to that loan forgiveness, so anything that you spent during the 8 week that you get forgiveness for, those are not going to be deductible for income tax purposes. And that seems to be consistent with the law in place. Now, a lot of members of Congress have expressed their disagreement with that provision that the IRS has came out and stated, and said that they would issue a correction to this. And this is not only just, small members of Congress. This is the chairman of the House Ways and Means Committee, the chairman of the Senate Finance Committee. They all came out and said the IRS got this wrong. We intended for them to be deductible. But in order for them to be deductible, they're going to have to pass a law that says that they are. And that was not included in this HR 7010. So it may be included in future bills, or it may not. But as of right now, expenses are not deductible.
Okay, very good. So that concludes our discussion of the new law. Now, a lot of you, and by the way, the more recent pronouncements we have here on the first few pages, and page 27, page 26 and page 27, there can be personal liability for this PPP loan if you do the wrong things, if you put the wrong information in the application, if it wasn't necessary to support the operations of the business. If you pay the wrong creditors and go bankrupt, you can end up owing this PPP loan. So please be careful. Talk to your lawyer, talk to your accountant, talk to your hairdresser, get all the right advice. And then finally, we have had a lot of questions about how the spreadsheet works. The spreadsheet is not free. The spreadsheet would be purchased from Lineberg. But Brandon, do you want to put the spreadsheet on your computer? Take control and answer a couple of those questions?
Sure, yeah, if Matt wants to give me screen here. So can you see the spreadsheet?
Yep.
Okay. So yeah, this was designed by Kevin Cameron, and man, let me tell you, it is an excellent tool to really track your expenses during the loan. And by tracking these expenses, it automatically fills out a good portion of your loan forgiveness application. So this is a really useful tool. So I'm just going to spend a few minutes just going over what's here and what has been recently updated, because we did make some changes to this most recent week. So we want to make sure everyone's aware of those. And when you do purchase this and we make any type of changes, it's automatically updated, and in the link that you get to download it will always give you the most recent version of the application, and you should get notification that something has changed so you can go in and re-download that new version. Now, if this bill passes that extends this covered period from 8 weeks to 24 weeks, we'll update that, and we'll also provide the ability to make the election of whether you want to use the original 8 weeks or use that 24 weeks, so you can compare the two scenarios and see if you meet forgiveness in the 8 weeks, you can go ahead and apply and get that covered. But going through here, what the spreadsheet does is we have the covered period, which is the 8 weeks, the alternative covered period, which provides that you can use your first payroll date after your loan for your 8 weeks rather than the date that the loan hit your bank account as the start of your 8 weeks for payroll costs, not for non-payroll costs, just for your payroll costs. And that's really just for administrative convenience if you want to just completely match up your pay periods with your 8 weeks. So we can enter the amount of our loan received. We can enter the EIDL advance that we received because we know that's going to reduce our loan forgiveness, so we can track that. And then down here on this expense tracker, what we can do is just enter in all the expenses, categorize them in the appropriate columns, whether they would be payroll costs, non-payroll cost, our interest on rent, utilities. And you'll see in the top right-hand corner of a lot of these boxes a little red ribbon. And if you just hover your cursor over the boxes, what pops up is just a brief description of what these items are, some instructions from the application, some instructions from SBA guidance, and then also Kevin's words of wisdom, which just provides some tips and some traps in certain areas on these items. So anywhere you see this red box, you can get a summary of what you're supposed to enter into the box. So once we enter in all of our payroll cost here, all of our expenses during the 8 weeks, we can also enter in compensation for anybody that is over that $100,000 limit based upon prorated for the cover period. So that's $15,385. We have to enter in individual salaries over that amount, so it reduces the amount of our payroll cost. So we fill in the blue items, and then those carry over and help us with the loan application. So then also, and this follows exactly the application for loan forgiveness, we have this PPP Schedule A where we can enter in employee information, and this is what you have to enter in on the application as well. So these can really just be printed and attached to the application versus having to fill out the schedules for the actual application. We'll fill in the items for employees on table 1 making less than $100,000. We'll fill in table 2 for those making over $100,000. And then we had the final table for owner compensation. And we added this because of the new limitation on owner compensation that it cannot exceed the lesser of 8/52 of $100,000 for your 2019 compensation. So we've provided inputs to make that calculation. We also have inputs to calculate that full-time equivalent employee reduction and whether or not the safe harbor applies, which you'll see here at the bottom of the Schedule A worksheets. So we'll fill in those information, and then all that pulls into, you see here in PP Schedule A, that's required to be submitted with the application. So you'll see the different line items that follow the exact application. We see our full-time equivalent employee calculator, and you'll notice here that you don't have to enter in anything into this box anymore. This comes from your full-time employee equivalent calculation worksheet, which we have just recently added to this spreadsheet. Now you can either fill out that spreadsheet in its entirety and let it fill in the box here for you, or you can just manually override this amount if you have a payroll type report that you can use to provide those calculations for you. As we mentioned earlier, there's exceptions for this reduction, and we have the ability to input those exceptions for the reduction in your workforce. And we have a little guidance here about those rejections as well. And as Alan mentioned, we have the rehire exception, and we know that has to be pursuant to a written offer and a written rejection of that offer. We have the termination for cause. If an employee voluntarily resigns, that's not considered a reduction. And then also if someone requested a reduction in their hours, then that's also not considered to be a reduction. So essentially, the borrower is not going to be penalized for issues that aren't necessarily due to actions of the borrower and are more due to employee type actions. So once we enter in these amounts on our PPP Schedule A, we can go to the loan forgiveness application. And the nice part about this spreadsheet here is you don't have to enter in anything on the loan forgiveness application. The data you've already entered in the expense tracker and the worksheets fills out the application for you, and you can take these line items and then just directly copy them over to your loan forgiveness application. Now I'm going to touch a little bit on the new tab here added to the spreadsheet, which allows us to enter into the spreadsheet our full-time equivalent employee information. So for each employee, you can enter in their information. Here we can elect whether or not we're using the simplified method or the actual rounding method for our full-time equivalent employees. We had the payroll period ending on or including February 15, 2020, and that's relevant because that's where our safe harbor applies. We have to measure whether or not we had a reduction on this date as compared to prior dates. We have the two alternative periods here that you can enter in to provide the number of full-time equivalent employees that you have. So you'll see that all the alternative calculations are provided here for you. You don't have to elect which one, and it just automatically does that for you. And then finally, we have the tab here where we have the seasonal employer calculations, that they have the alternative period where they can choose any 12-week periods to make their calculations towards this full-time equivalent reduction. So all that's there for you on the application. And we have a different video that Kevin has that comes with the purchase of the spreadsheet that goes through all this and in a lot more detail. But I just wanted to provide that short summary for you now. Alan, anything else you want to add there?
No, we promised 30 minutes and we delivered 30 minutes. If anyone has any questions, any comments, any suggestions, please email us. You can email to agassman, A-G-A-S-S-M-A-N at gassmanpa.com, or Brandon, B-R-A-N-D-O-N at G-A-S-S-M-A-N, P as in Paul, A as in Apple.com. Have a fantastic rest of the morning, and thanks for what you do for others.